And we are officially live, so greetings everybody. I'm just going to shout out to everybody that we are live, and hopefully everybody knows what to do. And if you are on YouTube, then drop a comment in the chat box and we will see if we can take some questions. And we will gladly answer what we can. There won't be a lot. Graham, how much time do you have? Obviously, we like to keep these under 15 minutes, but just so that we know as well to respect your time.
Yeah, let's shoot for 15 minutes and let's see how we go.
All right, let's do that. Let's do that. Okay, so everybody has joined us. They are there. That's great. One last little tweet to confirm to everybody that we are live. Here we go. We are live on our YouTube channel. Here we go. Cool. So, Graham, you and I had a nice little chat before we went live about the trend looking good. It's been a long upward trend at the moment. It's really looking like cause for concern, this pullback at the moment. So let's just jump straight into it. How are you feeling in terms of the market strength?
Yeah, look, I mean, I'm feeling very little concern personally at the moment. I'm not ready to take profit. I think this is the first up leg of a macro bull trend, and that's been my view for quite some time. On a technical level, breaking out of that symmetrical triangle, you look at the fundamental picture where you've got easy monetary policy, low interest rates, which in my view distorts the valuation of traditional assets, placing them into large bubbles. I think that the case for Bitcoin has never been stronger. So I only see us going higher in the longer term, in my view. So yeah, any pullback is a potential buying opportunity, in my opinion.
All right, so take us through the charts that you have for us.
Sure. So let me share my screen.
And let me know if I need to make you a host in order to share your
screen. Enable my sharing ability.
Okay.
And can I actually ask, just before we jump to the chart, I just want to talk through the scenario of investors or traders, actually investors in this case, wanting to allocate a portion of their investments to crypto. And I think that I think many times investors are getting it wrong potentially in this stage where they're looking for very large pullbacks. And I just want to talk through some of the rational and maybe simple fundamentals behind entering into an investment position, because I think the biggest concern I have is not from a trading perspective of missing trading opportunities, but missing the long-term moves of Bitcoin. So there's a saying in investing that says it's not about market timing, it's about time in the market. And there's limitations to any rule of thumb, but it definitely does hold quite a lot of weight. And when the market starts to really move like it has now, it's not necessarily your trading positions that make you money, it's really your holding positions that you really start to benefit from. And I think there's many people, specifically on our group, who perhaps feel like they've missed the boat. They didn't get into Bitcoin when it dropped to $4,000 around COVID. They didn't get an entry at 8,000 or 10,000 for that. We're now sitting at 18,000. And a lot of the rhetoric I hear is like, we've missed the boat. We're going to wait for a big correction. And there's no guarantee that you're going to get that. So how do you actually manage that? I think is the question. So if you don't mind, James, I know that's a little bit off script, and maybe this is the magic of live streams. But I'm keen to take us through a little bit of a scenario.
Absolutely, please do.
Okay, great. So I've got something on the very, very simple numbers on a spreadsheet here. So let's say that our portfolio size is $100,000, and this could be 100,000 Rand. It really doesn't matter. So it's just conceptually how this would work. And then you say to yourself, and I think this is the right way to go about it, what amount of my investment portfolio am I willing to allocate to Bitcoin or to crypto in general? And this is not financial advice. Every individual is going to have a different number that they're comfortable with. And really it has to be a number that you're actually comfortable with being willing to lose. So if you do lose 100% of your investment in crypto, you're still going to be able to wake up in the morning, put food on the table, and not slump into some severe depression. So that number is different for everyone. But let's say for this example, it's 10%. You would then allocate $10,000 of your $100,000 to crypto. And now this is a scenario I want to play out. So, I mean, crypto is a high risk speculative investment. I still think even at this stage, it's hard to define it as anything else. So there is a scenario where Bitcoin can go to zero. Maybe there's something wrong with the code. Maybe governments decide to ban it. There's a couple of scenarios. However unlikely they may be, there is the possibility that Bitcoin still goes to zero and you lose 100% of your capital. So that's something that you need to be comfortable with, I feel, as someone that's looking to allocate investment funds into crypto. But on the upside, you've got other scenarios where Bitcoin can potentially go to $1 million. And I'm not trying to be, what do you call it, exaggerating when I say that. If you have a full unwind of the financial system as we know it, a hyperinflation scenario, funds moving out of these bubbles of traditional assets, and Bitcoin is seen as one of the safe haven, you're going to see an absolute explosion in price. So the reality is that you're probably going to have the Bitcoin price end up somewhere in the middle, let's say in 5 years' time. It's not going to be a 0 or $1 million, but maybe somewhere in between. But those are the extremes that you're playing with. And in that extreme scenario, if you go to zero, obviously you lose 100% of your funds. But if you go to $1 million, you make 50x, 50 times on that investment. So that would see your initial allocation to crypto at $10,000 or 10,000 Rand or whatever currency you denominating your investment in. And you would see that go from $10,000 all the way up to $500,000 for that specific allocation. So that's a very asymmetric payoff. And as investors, those are opportunities that I like, is asymmetric payoffs, where the potential upside is far greater than the potential downside. So even if your investment goes to zero, if you size your position responsibly, I still think that there's a very good argument for allocating a decent portion of your investment capital to this investment opportunity. And I guess I'm just a little bit worried at this stage that many people miss it because they're waiting for a big correction, or they feel that they've missed the boat and it's too late.
So what kind of holding time would that allocation be? I mean, for someone who has an investment portfolio of, let's say, 100,000 Rand, perhaps that 10% is allocated to more aggressive assets. So they're in and out of certain assets that maybe are 6-month investments or a year-long investment. They've, for instance, seen some stuff on the JSE, or they're speculating on commodities where they think gold's going to move quite significantly in a year. I mean, a 50x return is not a 1-year expectation. Am I right?
100%. So this would be you taking a long-term view on Bitcoin and crypto as an asset class. So at 100%, you're not expecting this to go materialize tomorrow. This is if you've looked into Bitcoin, if the idea makes sense to you, if you're wanting to hedge yourself against the collapse of the financial system in its current form, and you do have significant exposure to equities, bonds, you've got some savings in the bank, and some of the events that could unfold over the coming years could be a real threat to that. If the current financial system unwinds and you buy into the Bitcoin idea, then this is the type of mindset I would suggest that you take. And if that's the way that you calibrate it towards this opportunity, then this is how I suggest you go about allocating some Bitcoin into your portfolio.
One more question before we get into the charts, Graham. So that would be a long hold allocation, 10% of your portfolio. Of that, not necessarily of the 10%, but of that total portfolio, how much is allocated to actual trading? We're talking whether it be crypto trading, where you're leveraging your trades, etc., and perhaps even foreign exchange, forex trading. What percentage are you allocating that 100,000 Rand, for instance, to more short-term trading?
So for me, that number is only between 5 and 10%. And I am a fairly active trader. And because you can leverage that up, you can still get a decent exposure for that type of allocation. So it really doesn't have to be big. But for your average person who's not a trader, that number would be 0, and there's absolutely nothing wrong with that. And that individual would only be a buy and hold, or longer term, at least a longer term, investor with bigger time horizon. So Raoul Pal is someone that is very well known now to Bitcoin followers, and I mean, he's not a trader. He says openly, I don't trade, I'm an investor, and that's what I do. So even someone with that type of experience and that background still doesn't dabble in trading, and there's absolutely nothing wrong with that. So each individual obviously needs to play to the skill set that they have. But at the same time, I will say that every trader should be an investor. So everyone should be an investor. Trading is optional. So that would be my viewpoint.
Final question, because this has actually been very enlightening, I think, for a lot of people to get their head around allocation sizing. So 5 to 10% of your portfolio is going to trading. So let's call, if we're using the example of the 100,000 Rand, let's say it's 5%. That's 5,000 Rand you've allocated to trading. Of that 5,000 Rand, are you then saying that you allocate about 5% of that 5,000 Rand per trade?
So no, what I do is I say, I basically say this is the amount of capital that I'm willing to, basically risk on. So, and that will be my trading capital. So yes, so that's 5%. Let's say I've allocated 5% of my funds to trading. I would only actually risk between 1 and 3% of that amount on any one trade. So that's how, and that's often blows people away when you tell them that for the first time. That's personally I manage it, and it's a very, I would say, low risk way to actually manage your leverage trades is to denominate it as a very small percentage, between 1 and 3% of your total trading allocation. And really the name of the game is compound interest, compounding gains. So you don't have to make hit the ball out of the park on any one trade, and that's not the point. I'm not looking to hit the ball out of the park on any one specific trade. I'm looking to accumulate over the long run in my trading account gains as you go, and obviously you stretching out your wins versus your losses. So you've got a risk reward ratio that's greater than 3 to 1, and just looking to grow that pot slowly but surely over time.
So just to confirm, you're allocating about 1% of the 5%.
Yes.
Okay.
So in my case, I've allocated 10% of my capital to trading, so it would be
1% of the 10%.
Yeah, 1 to 3% risk of the 10%.
Yeah, and then obviously you're leveraging that. So that's another discussion for our various training courses that we do. So Graham, very helpful, very nice overview for those that feel like they may have missed the boat. We're sitting at $18,500 right now. People think, oh, that's the pullback over. I never got in. Woe is me. But actually, people have to take a long-term view. So take us through what you're seeing now after this recent pullback.
100%. Yeah, and then to mention that, to carry on to your point there, James, I think it does become, you are under a little bit of pressure now to get your allocation into the market if you haven't been accumulating previously. So this is a longer term view of the chart here. This is a 3-day chart. Here was the COVID drop that we've got some Bitcoin at $4,000. This was a greater accumulation point here. We had a longer period of time to accumulate. That was around the $6,000 area, and then $10,000 we had quite a lot of movement around that level. So ideally you would have been accumulating at this stage, but if you're now entering the market for the first time and we are in a rampant bull market, you are under a little bit more pressure to enter, to get your allocation into the market a little bit quicker than someone that's already got an allocation. You can now in this position be a little bit more selective. So I've already got a decent allocation. I don't have to buy when there's a 5% pullback. I can be more selective and see if we can get something deeper. So that just depends on where you're at. But if you're still looking to deploy 100% allocation of your funds, maybe you also don't want to go on a pullback approach. You actually want to look at entering every couple of days, or once a week, depending on how long you're willing to stretch out your investment period. But I think the risk is greater in this situation that the market actually runs away from you and you don't get filled at these type of levels versus not getting filled at an ideal pullback situation, if that kind of makes sense. So you got to have kind of weigh those two sides of the coin up. So either be a dollar cost average approach where you're buying when the market falls, or you just putting into the market every 5 days or once a week or whatever you're comfortable with.
All right. Now,
cool.
take us through this recent pullback. As you can see there, I mean, this is a 3-day chart that you have up, and I mean, the reality is that pullback looks very insignificant on the 3-day chart, doesn't it?
It does, for sure. So, and look, I mean, I was actually expecting a bigger pullback. So if we just do a Fibonacci from the lows of COVID to the top here, we didn't even get a retracement down to the 23% odd retracement on that move. So I thought this would be the minimum retracement that we would see, and we didn't even get to that level. So that shows you, the underlying bullishness and how quick the buyers were actually to swoop on that opportunity and buy that up. I mean, we still might fall deeper than this. There's no guarantee that that is the local bottom. We may still go and test that and move further. But if this remains the case, then that's a very shallow pullback for the magnitude of the move that we obviously have had since COVID began. So 100%, James, I think, and you can look at 2017 as a decent example of when sometimes the market was just so bullish, you just didn't get the opportunity to buy on a decent pullback. And there you would be better off just buying on a time basis, again, rather than waiting for X percent pullback in the price. So that is, the conundrum that you do face as an investor trying to enter the market now. But yeah, so this was the pullback that we got. Then you go into a shorter time frame period. So that's a better look at it. And now this is very interesting, because now the question is, we did get this bottom here, and this is quite a strong bottoming pattern, at least especially if we go to the 1 hour time frame. We've got a double bottom. We've got pretty good volume down here. We've turned around. Now the question is, do we go straight bull from here? So do we just carry on this temporary move that we've got and then just blow through the 20,000 level and keep going? My view is that that's less likely than we see some sideways movement, a little bit of choppy investing, a little bit of choppy price action. See this price, take a little bit of time to build up some head of steam, some momentum, and then have that breakout from there. And I think that would be, give investors a little bit of time to accumulate. If you're a trader, you may want to set up some trades with a stop loss if we get some tightening of volatility in this triangle structure. If it develops further, this is still very early stages if that is the scenario that's going to play out. But yeah, my bias is that 19,000 looks like a decent level of resistance. That holds off any further price action above that point. We then move down to 18,000. 18,000, roughly speaking, looks like a decent level of support. And then further than that, 17,000. I would be surprised if we break down lower than 17. So personally, I'm looking to accumulate a 17,000. That's my level. We have got a little bit of dry powder on the sidelines. If we fall at that level, I'll be looking to push an allocation into Bitcoin at that stage.
And Graham, the upper trend line there, hovering around the $9,000 level, would that be an invalidation for you of potentially seeing that pullback once we break that $19,000 upper trend line? Would that be, no, this is really off to the races now?
I think so. So if we get a clean break of 19,000 and we then get a retest, and that 19,000 level then holds a strong support, so first we would need a clean break, then we would need to see support. Only that once those two boxes are ticked, then I'm starting to change my perception or my viewpoint, and then saying, look, we could be going straight bull from here. We need to allocate funds into the market a little bit faster. Especially, again, if you are in a situation where you're looking to, we've kind of missed previous accumulation points, you're looking to move quite quickly into the market. So yes, I would agree with that, James. Okay,
so we are at our level at the moment of us saying we would hit about 15 minutes. We are well over that, Graham, so we want to honor your time and the viewers' time as well. I see you have some other charts. Which of those are most pertinent to you?
Let's quickly have a look at Ethereum, and Ripple's the other favorite. Okay, so Ethereum, we can go through these quickly. 500 was quite a significant level here, and we really took off after that 500 level. We did come back and retest it, so a really good opportunity to get filled at 500 again. We're now moving quite strongly. I would think that we have the same type of setup here. If Bitcoin pulls back, Ethereum will probably also pull back. I think that you're going to see the same patterns materialize over many of the crypto charts. Ethereum, again, I think longer term has more upside, explosive potential, but obviously more speculative. Ripple, here's your 1 hour chart. I think Ripple's looking good for more upside. I mean, this is a very broad triangle here. I think that there's definitely the opportunity to get more consolidation, more squeezing. So I'm not interested in any additional investments. I'm not interested in any leveraged trades at this point in time. I'm really sitting on the sidelines waiting for this pattern to play out, seeing if we get that contraction of volatility. And if we do, then that's the time I'll be sitting up and looking to take some positions. But for now, I'm quite happy to sit back after this exceptional run that we've had. Wait for things to settle down, and then obviously look out for the next opportunity as and when it hopefully materializes.
All right. Well, I'm going to quickly give an opportunity to a few questions very quickly, Graham. How quick you answer them is entirely up to you, or how fast you want to go through them. Paul, obviously an avid trader on our WhatsApp group, he asks, does the lack of volume at your various pullback levels have an effect on the depth of the pullback?
Sounds like a good question. Can you just repeat that one more time so I've got it 100%?
So I'm going to repeat it verbatim. Does the lack of volume at these levels have an effect on the depth of the pullback?
Yeah, so I can only interpret this the best way I understand. So I think he's referring to the fact that we don't have very much volume historically at these price levels. Because if we do go back to 2017, we had massive price movements at this level, but very little volume, because it's actually stuck around at these levels for such a short period of time. So it is harder to identify, price by volume levels here. If anything, I would think that typically it would, result in bigger potential pullbacks because you don't have that, historical levels of support that the market would find naturally on the way down. However, given that Bitcoin is in such bullish mood, we saw this most recent pullback getting, bought up so quickly. I'm not buying into that completely. I think that pullbacks are potentially going to be few and far between and fairly shallow. So hence again, I'll repeat that it's probably worth looking to get in aggressively on any potential decent pullback like we saw over this last weekend, or a time-based strategy where you're looking to phase in the market on a time basis.
Okay. What are your thoughts on the CME gap? I assume that is referring to the Chicago Mercantile Exchange.
Yeah. So personally, I don't follow the CME gaps too much. I have seen evidence where people have pointed out that those gaps are inclined to be filled. I prefer not to give an outright comment on that. It's not something I watch particularly closely. I know that there's plenty of other people that will be able to give you more insight into that, but it's not something that I spend a lot of time for my personal assessment of the market is looking at CME gaps.
Okay. And this is a tough one to answer, but I'm going to ask it anyway. Tyron asks, also an avid trader on our group, how high do you see ETH versus BTC going this bull run, Graham? 0.1 BTC possibly?
So you're talking about the ETH BTC price?
Yes.
Sure. So I've got it on my screen here. And yes, longer term, so when I say long term, let's say over the next couple of years, I do expect to see Ethereum at higher valuations than it is currently to Bitcoin. So this is the chart here. And particularly in the shorter term, when we saw ETH really bleeding against Bitcoin in more recent times, I felt that there was a good chance that Ethereum would bounce back. It is now running into this resistance, which is this pink level here, where we've seen significant price by volume action. And it's that's just a key level, and we can see that it's respected that level recently, where it hasn't been able to break higher. But I really like to look at this chart. You can see there's a rounding bottom. I think this is smart money that's accumulating Ethereum. I think Ethereum on a fundamental level has incredible use cases and potential, to build out financial systems, etc. So 0.1, I mean, that is pretty high. I don't think it's off the table. It just depends what type of time horizon you're looking at. I mean, Fibonacci levels are the easiest thing to kind of get a decent feel for where a price could potentially go. I mean, we're still not even out of basement. We're not even close to that first Fibonacci level. So 0.1 is still a long way off. You'd expect resistance here, so that's about 0.05. More here at 0.07. So it's quite a long way to climb. But I mean, 2017 shows us how excited and exaggerated these price movements can get. So this is crypto, and you can never write anything off. But yeah, I think there's a long way to go before we start talking about 0.1 Ethereum next to Bitcoin. But yeah, just to summarize, I'm very bullish Ethereum. I think that it will take market share away from Bitcoin proportionally from where we're sitting at currently.
All right. Well, we will leave it there. Graham, thank you so much. That has been very comprehensive and very, very helpful indeed. You are welcome to shut off your screen if you want to on your side.
Sure.
And yeah, so thanks so much everybody for joining us today for our first live stream of the market analysis. Let us know in the comments as well on our WhatsApp groups, our Telegram groups, what you thought about an official live stream here. This is the first time we've done that. Normally we have a couple of takes and we're able to edit it accordingly. So obviously things not as polished, but I think a lot more interactivity, which is helpful for you, the audience as well. So we'll leave it there. This edition was proudly sponsored by CentralX. CentralX are a new exchange with the Chief Strategy Officer actually part of the Global Crypto Groups. He's been part of our groups for many, many years now. And he's founded an exchange with a couple of partners called CentralX. They have an ILO. It's an initial launch offering. And there's going to be rewards based on the company's performance that are allocated to token holders, plus you get democratic voting rights based on your holdings. There's a whole bunch of stuff tied into their token. So check them out. They really look to be an ambitious group. Centralx.com. Their ILO is currently in pre-sale at the moment for 3 US cents. You can check them out. Centralx.com. I will put a link in the description as well. That's where we'll leave it. Until next time, guys, again, please just give us your feedback. Thanks so much. Graham, thank you for giving us your time. That was outstanding.
Thanks, James. Yeah, thanks to the viewers that tuned in. Looking forward to doing more live sessions going forward.
It'll be brilliant. All right, until next time, cheers, everyone.
Cheers for now.